Welcome to the Nate Gratian Show, where we talk all things personal finance, investing, and entrepreneurship. Thank you for joining me here today, and I hope you're having a good day. Today we're going to take a look into Q4, quarter four. We've just, for the stock market, we've just started the quarter out, and we've had one day of trading essentially at the time of this podcast, and it started out with a big bang of just over 2% increases in all the major averages like the Dow Jones, the Nasdaq, and the S&P 500. And what we're going to do today is I'm going to share my thoughts of what I see happening in the coming 3 months, the remaining quarter of 2022 in the stock market. Please understand these are again my thoughts and where I see the stock market sitting at the moment and where I see things what potentially could happen in this quarter as we go through it, and three big things that we're going to be taking a look at, that we're going to be watching as we go through this quarter. Before we get started, also, did you guys know that all these episodes go onto a YouTube channel, the Nate Gratian Show on YouTube, and it is just the audio for the podcast, but I do release about 4 to 5 shorts a week as well, giving you quick updates about what's happening in our portfolio and things that's happening in the market throughout the week, and so you can get those shorts as well as the podcast episodes on YouTube at the Nate Gratian Show. If you want to find out more about me, you can do so on my website ngration.com. That's ngration.com, or on eToro, where I am a popular investor on there. Let's dig into this quarter and let's start off by talking about the three things that we're really going to be focusing on and watching as we go through this quarter. The first is the midterm elections that's taking place in November. Now, many people expect this is going to affect, this is not affecting the presidency or anything in the US. This is focusing more on the Senate and how it feeds, when the president presents something, it feeds down through before it's just passed into law and the policies are acted upon. And so what the market is and what many people are expecting is they're actually expecting a Republican win there, and to take the midterm election and really balance things out. Now, this is not political but purely financial, is when things are balanced in the House and in the Senate, the market prefers that, because essentially they can't, Congress, then the government can't just make decisions and sweep them through and have them coming through. It takes some time, and the market likes where there's a balance in these areas. And so it's not that it's necessarily anything political or anything like that. It's all to do with balances, and you see over history that when things are balanced in these areas, that the stock market performs better than usual. And so that's something that we're going to be really focusing on and watching as we get closer and closer to November, and watching what will happen in the midterm elections in November. The second thing we'll be watching is the next 3 months, the number releases, the numbers that are released each month. So these are things like your CPI, your Consumer Price Index, your Producer Price Index, the PPI. They're your inflation numbers, and the Core Consumer Price Index as well. We'll be watching as well. It's the PCE, and we're watching those and the inflation numbers that will be coming out, along with retail sales numbers that come out each month as well for the previous month. This tells us the strength of the consumer and how they're progressing, and we want a strong consumer as we go through towards the end of the year. The thing we have to also understand, if the consumer is too strong, though, that is inflationary. And so businesses, while people go ahead and purchase things that they're charging more for than they used to, they will continue to charge those as long as people keep buying them. And so we want the consumer to be strong, but it is one of those numbers that we want to thread the needle. We don't want the consumer to be too strong, if that makes sense. And then the other number we'll be watching as well, which it comes out this Friday, the first Friday of each month, usually for the previous month, is the jobs and payroll number. This is another number that needs to thread the needle, really. If it's too weak, then that's good on the side of inflation in that perspective, because people won't be spending the money. But if it is too weak and jobs are going down, then that means, and payrolls are kind of slowing, then that means there's a higher chance of a stronger recession than what is experienced technically at the moment. And so if that's too weak, then there's a high chance of that. If it's too strong, then the issue we face again is inflation. We face wage inflation. And the Fed is really trying to battle inflation, and they've said they're going to continue raising rates until they win against inflation. And if you've got wages going up and you've got a strong consumer that's continuing to buy products and push prices higher, then it's fighting against the Fed a bit. And so we need these two numbers, the retail sales and the jobs/payroll number, to really thread the needle as we go through this quarter. The next thing, and the third and final thing we'll be watching, is what the Fed speaks and what they say in between rate rises and what they see for the future. And so we'll be watching what, if they, that's expected that they'll raise rates again in October. But then we'll see what their projection is for the future. And hopefully they really follow the data and they watch inflation and they keep a close track on it, because if they push too hard and they go too far, which the Fed is a bit known for sometimes going too far, starting off slow and then going too far at the end, could push things into a tighter and bigger recession than what's needed, and then they'll need to backtrack pretty quickly. We saw that at the end of 2018. Now, the way I can see this quarter playing out, and again, this is just my thoughts, and nobody knows what the future holds. There's a lot of things that people don't see coming, and so this is why I tell people to invest regularly, be diversified, invest through ETFs. So it's a great way to invest, and just out of your paycheck, deposit a little bit each time, and continue to invest over the long course, over the long period, and things will be okay. But the way I see the quarter potentially playing out is we've had a strong start this first day with over 2%, and I can see that continuing for a little bit through this first week of October before we have a bit of a pullback, another pullback through the middle of October. And then as we get to the end of October, we start looking to the midterm election. There will be a few things that come into play. One is the midterm election. The other is we'll have more data by that stage. We'll know by the end of October. We'll have what the Fed's raised rates by another month done. We'll have more numbers from the CPI, the PPI, these retail sales, and the payroll that's coming this Friday, so we'll have more information behind us, and then we'll have heard from the Fed as well about future and what they're kind of thinking looking into November and December, and so we'll have more information. And this is where I can see if the Fed mentions potentially pausing and taking. Not pivoting and not pulling rates back, but pausing and taking a look at where things are sitting. I can see the market rallying into year end and setting up for what could be a strong next year, all dependent on a lot of these numbers and the information that we receive, and that we don't go into stagflation or a deep recession. And so they're kind of the things that I'm watching, and that's where I can see the market heading. And that's where I can see what I can see happening as we go through this quarter. Again, I've said this before, these are just my thoughts, and this is why I urge people, look over the long term, focus on the long term, keep investing, keep depositing funds as you get paid, a little bit each time, and invest it. But thanks for listening today. Again, take this, however you'd like to take it, but this is what I'm doing as I continue to invest. And we're depositing funds into eToro tomorrow, which would be Wednesday the 5th of October, and we'll be investing those into SCHD, which is a Schwab's high dividend ETF. It also performs quite well over the long term with its capital gains, past 5 years done over 40% at the time of this recording. And so we are continuing to invest, and I encourage you to do the same. If you have a question or a topic you'd like discussed on a podcast episode, send me a message on Instagram at NateGration or on my website ngration.com. And send me a message and I'll let you know when the podcast episode's posted about your question or your topic that you'd like discussed. Again, don't forget about that YouTube channel, The Nate Gration Show. Would love to see you on there. It's something we've just started in the past couple of weeks. And would love to see you on there. And you could be one of our first few subscribers. I think we're sitting at a grand total of 3 subscribers. We'll see you in the next episode. Have a great week.